Morning, Steve here in Chicago with the morning grain comments. Well, kind of a numbers day today when we get export sales and U.S. Soybean monthly crush data. Yesterday was a bad day. We took out key support under the 4.20 December corn, $5 wheat, and $9 November soybean price levels, and then went sharply lower. Open interest jumped up quite a bit yesterday. The first thing I think was the fact that we didn't really get any positive news out of China on the U.S. and China trade deal. Seems like the Chinese minister is still kind of chiding the U.S. for not giving in a little bit more and meeting halfway on some of their needs. And there was no real signs yet that the Chinese are going to come in and buy U.S. ag goods, and so that weighed on prices. The second thing I think the market looked at was the chance that we could see some showers next week across the Midwest. Until then, temperatures are not going to be really that hot. Humidity is going to be low, and so we're not really stressing the crop. We may not be adding yields to the crop because there's not a lot of rain in the forecast till late next week. The other thing was the technical side of the market. Once you broke down below the key support area, there wasn't really a lot of buying or a lot of support in the market. Funds yesterday were net sellers of 5,000 wheat, 20,000 corn, and almost 10,000 beans. We show that they're still long about 15 wheat, 100 corn, and short about 50 beans. And so relatively small positions. I think that August will be a much more important weather month for the U.S. crops because the crops are late, and so we will determine the final corn and soybean yield the month of August this year versus normally. The corn's already made by now, and the beans are in the final home stretch. Export sales, we're looking for 300,000 to 600,000 tons of wheat, 300,000 to 800,000 tons of corn, and 150,000 to 700,000 tons of beans. Again, these numbers are below the pace needed to reach the USDA's number. June U.S. soybean crush might be 159 million bushels. That's down from 165 in May and almost 170 last year, and would be the smallest monthly soybean crush here in the United States since September 2017. One thing to do is watch soybean oil stocks end of May. June declining to 1946. It would be down from 2 billion pounds the end of May and 2.3 billion pounds the end of June. And slowly, on a crush data, the soybean oil is gaining a little bit of share of the crush. Again, Midwest weather forecast continues below average temps next 10 days with less than average rainfall. By the end of next week, moderate rains could be seen in much of the region. 11 to 16 day continues to see average to below precip and below average precip for much of the Midwest. So again, a big down day yesterday. It's going to be hard to recover from that unless the USDA gives us something bullish on their August 12th crop report. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.